Hi guys, it's your guy here, the unknown trader, and today I'm giving you part 2 of entries, getting the best entries. In the previous one, I showed you how to get entries on a 1 hour time frame. I think that video became long, so it was only fair for me to cut it and give a part 2, okay? Because there was a lot to grasp, okay? And again, I apologize. This concept, it's a bit hard to grasp, okay? Because that's how it is, okay? Remember, when you are trading against institutions, highly educated people, people who have tons of experience, people who have unlimited resources. They are using the best tools. They can actually see how many orders they're getting, okay? Things we can't see, okay? There's a lot we don't see that they see, and they have unlimited capital, okay? They use the best algorithms. They have teams in different continents, as I explained in my first video. So you just have to know that, guys, we are very small guys in this circle, okay? In this industry, retail guys are small, hence why they don't have the capability or what it takes to move the market, okay? So there's a lot I explained on part 1. Just go and look at it, just go and watch it. It was a very interesting video. It became long because there's just a lot to explain. There's a lot to understand. I'm not gonna show you trend lines. I'm not gonna show you support and resistance. I'm not saying they don't work. No, I'm not ruling anything out. If they are working for you, good. But I need those who are saying we have been struggling with consistency. I want you to be consistent. Markets are never gonna be perfect, but nothing ever changes. Everything remains the same, okay? Everything will always be the same. And as you can see in this previous video, I have entry criteria. Just write these criteria down, because every execution I make is based on these criteria, okay? Just write them down. I will explain them, okay? It's just that in my previous video I talked more about trapping and all sort of stuff on a bigger time frame for those who are actually executing on bigger time frames, because I've seen that most people don't really like the smaller time frames, okay? Because even my mentor Peter Brandet, he doesn't really like intraday trading, because he says it's more about trapping, more about manipulation, which is true, okay? It's more about manipulation, but I want you to understand everything. So without further ado, I believe you've written this down. That's why I'm trying to talk, so that you can just actually copy this. Now that you have this out of the line, look at my disclaimer in my description, because yeah, I have to give a disclaimer. I'm not a financial advisor, and I'm not giving financial advice. If you are seeking financial advice, go to a professional financial advisor, okay? Trading does involve risk, and you can lose your capital, okay? So this is only for educational purpose. Now that we got that out of the way, okay, let's continue, okay? This is something I explained in my part 1. I'm not gonna explain it. I showed you how to know when a trade is logged, but I can just run through it. You must have a pattern, okay? Let's just pull this a little bit. Okay, let's just pull this a little bit, because I want to show you something. Here's the criteria. This was on a bigger time frame. I don't want to repeat what I said. You can just go and watch it, but I just want to give you a small understanding, okay? Because this video is about entries. Sorry for that. You need a pattern. We have a big M, okay? Or we have this micro M, or we can see we have a triple top, okay? That's good. We got that out of the way. A high. How do you know a high is in place? As you can see, this high, they have trap volume up, and now they are not revisiting level, but I will show you how you know that a high or a low is locked. As you see here, I've written lock, okay? You need a pin engulf. If you see, this is your pin engulf, okay? Pin engulf, okay? You need an engulf. This is the last engulf, okay? There's a pin engulf before, but I'm not in this one, okay, it's not visible. However, it's optional. This pin engulf is optional, but this engulf is not optional. When they are done trapping and done working a level, when they've sold, or they were able to either sell or buy whatsoever position they wanted to sell or buy, they will immediately move from that zone, okay? We need to see a breakout. We are not breakout traders. We don't execute breakouts. when there is a breakout, we want to see them going back. Why? Because there are many people who are using the breakout strategy. People believe that if there was a strong support and resistance, of which you can apply it here, and there was a breakout, they believe that, okay, now that means the market will fall immediately. However, we use 3 pushes back into the breakout. They break out, they close outside. And remember, this candle didn't just become a pin. It was once a big engulfing candle going down. So it got people to actually sell, okay? So they will do a lot of traps and tricks. And then we have 3 pushes into the BO. 1, 2, 3, okay? This is now, whenever they give you 3 pushes into the pattern or the breakout, that's when the level has been locked. That's how you are sure now that the level has been locked, okay? But I will talk about that, because today's objective is to go to the lower time frames, okay? And you need to know trap volume. All this volume going up here is trapped. So once you identify it and you get this pin engulf that moves away from all the nonsense that has been happening at the top, now it's a sign that they are going and they're never coming back to that level again. So guys, let's go to the objective of this video, okay? Sorry because my videos are long. It's just that there's a lot to explain, okay? There's a lot to explain. So now what I'm gonna do already, because I've explained the 1 hour time frame, so I'm not gonna repeat what I've already said. You can just go and watch part 1 of entries, okay? So now what I'm gonna do is I'm gonna go to a 15-minute time frame, okay? 15-minute time frame, okay? And just to help you understand something, let's just switch back to 1 hour, okay? Quite quick, okay? This market has been going up. I'm just gonna draw this line, which is a trend line, but for me it's not a trend line because I don't use trend lines, but it's just helping me to see that the trend was going up, okay? And now it has reversed. It helps me not to counter trend anything, okay? So that's what it helps me with, not for any execution, okay? And one important thing I'll repeat now that I've said on my first video is actually trading is more about waiting, okay? You spend 95%, 90% of your time waiting and only 5 to 10% executing. Most people believe that immediately. I was like that. I did that when I was starting actually, and I lost, okay? So what happened is, the moment you open your charts, you are automatically seeing a sell or a buy. First of all, you don't know which direction they're gonna take, and it's not about directions, okay? So you must have a setup. As you can see, this market is going down. It opens low, closes high, opens low, closes high, opens low, closes high, opens low, closes high, open low, closes high. And immediately when they're ready to reverse, it opens high, now closes low. You see, there is a change. Now they're showing you that they're ready to go. They pump the market up. Now they're ready to dump the market. Okay, on a 1-day time frame, this is the first green candle. Now you know that, okay, now they are ready to reverse, okay? So we are actually, everything about the markets is 1, 2, 3. That's what I use. That's a very important number in life, in the Bible, in everything. The number 3 is important, we always know. So once they give this day, I'm expecting them to at least fall 3 days, okay? So basically what happened, this was a day 1 going up, day 2 going up, and then day 3 they went up. Then if they don't show any sign of trapping or reversal, you start counting again. 1, 2, 3. Okay, so you see they started trapping on the 3rd day. This is how you count, okay? I'll show you everything in another video. So right now we see that this market has been going down for 1, 2, 3 days. However, I was expecting it to, because it was Friday. We know that Wednesdays and Fridays are highly volatile. So I was expecting this market to come and hit this level, okay? I think there's a video I did yesterday on Friday where I showed you why I was expecting it to come down. Besides, this is a downtrend. And if I believe that if Friday is going to be more volatile, I'm expecting them to come and give a fake breakout, then reverse, okay? So that's what I expect, okay? Because normally when you get a fake breakout, that's when it shows that, okay, the market is now ready to reverse. As you can see here, this went up, this went up. But as you can see, this dotted line represent the high and the low. So they gave a fake breakout, they came in, broke again, which became a fake breakout, and it was the beginning of all this reversal thing. So once they give a fake breakout, you can expect them to go in the opposite direction. So this was day 3 for me. Day 1 falling, day 2 falling, day 3 falling. So this was the 4th day, and I expected them to come here. If they are gonna reverse, at least I want to see them giving a fake breakout, okay? But they're not just gonna reverse just like that. They will do some trapping, maybe for a couple of days or whatsoever. So now we're going to a 15-minute chart. Now we know that the market is going down, and we are at least expecting them to come here, down here. So what do? We draw our consolidations. This was the last high. This was actually the last high on Wednesday night. So I draw my consolidation between the high, the last high of the US session, okay, and the low, the last low, okay, because you can't say this is the high. This is the last high that was in May. This is just consolidation. It didn't break this high. So this is the recent high that was in place. Why? Because it defiled this high when it broke its low. Market structure plays a huge role now. You must understand market structure, okay? So most people don't know the difference between a pattern and market structure, okay? Pattern is a reversal pattern, like I showed you, triple tops, whatsoever, head and shoulders, half Batman, full Batman, M's and W's. Those are patterns. But market structure is, if it's an, I'll show you that another day. So now we had our consolidations. We draw this maybe at 8 o'clock South African time, after the US session has traded. That's when we start drawing our consolidations. And then when we came the next day, we saw that, okay, the top has been broken. We want to see, already we have a thesis, okay, or a hypothesis, to put it in a better way. For those who are doing research, you know that a hypothesis is something like this is what you're gonna decide, okay? You're gonna say, okay, my hypothesis for this study is the color will be blue if I mix this chemical and this chemical, and the whole research must prove it right or wrong. But from, just to put it right, let's say maybe it's a thesis, okay? Because a thesis is something, something you make your decision based. It's the knowledge you make you that help you decide. So already we knew that, okay, it's broken down, and I'm expecting it to come down or at least give a fake breakout. So that's my thesis. But I'm not just gonna come here and sell, even though I'm expecting a sell, okay? So if you understand this, you will know that it's not about coming the following day and opening and seeing, oh, it says it's going up, and I'm buying. No, you don't chase candles. You see how big this candle is. They wanted people to chase candles. And remember this, the right moves are gonna be slow. Trapping moves are gonna be so quick, because they want you to see this candle going up and going up. It's a breakout. So all breakout traders took a position here. Breakout, okay? Breakout traders opened a position right here. Why? Because see how big this candle is. It's going up. FOMO, fear of missing out. It's saying, oh, this is gonna go up. But for us, we have a thesis that, okay, we are expecting it to go down. So when we see that violent candle, already we know that there's manipulation, okay? They're gonna play with human emotions. So we already know that. So that gives us calmness, okay? So it went up about 65 pips. So this is what we start paying attention to. Okay, we are at least expecting it to fall 65 pips, but just because it went 65, it doesn't mean we are targeting the whole 65. No, market behavior, we want to see how it behaves. Where does it give us our entry? Remember, this video is all about entries. Oh, now things are getting clear. 1, 2, 3. You see, this is on a 5-minute time frame. 1, 2, 3. What are we seeing now? We are seeing a triple top, okay? Someone will say, okay, it's 1, 2. It's still fine, okay? I spend a lot of time actually on my charts, day and night. I spend a lot of time, because if you want to understand this, you must start studying your charts, okay? That's important. Start studying your charts, because if you only see this on my on this course right here, then it's not gonna help you. You must go back and backtest. Okay, so when I usually prefer a 1 minute time frame when things are like this. Okay, so what I'm gonna do is I'm just gonna okay, this is the breakout. Okay, as we can all see, we're expecting it to come down, but we want to see how it behaves on a 1 minute time frame. This is during my session time. This is actually during London session. I don't bother myself with the early session, which is Asia, because I want to minimize my time on the screen. Remember, the guys you are going against have a very big team in 3 different countries. So there's a guy, there are those guys who are going to move the Asian session, there are guys who are going to move the New York session, there are guys who are going to move the London session. So by just knowing that, you will understand that, okay, you must be selective on the sessions you take, because you don't have all day. You have to focus on your things like your family, things like your health, things like doing something, playing some games or whatsoever. You just need your free time as well, because the main objective of becoming a trader is to have plenty of free time for yourself. It's not like becoming a slave of sitting on your screen. No, it doesn't work like that. So for me, basically, based on my time zone, I use South African time, I use 2 a.m. to 5 a.m. That's Asian session. I'm gonna use 8 a.m. till 11 a.m. London session. I'm gonna use 2 p.m. to 5 p.m. That's the New York session. So what I do, I wanna be there during the London and the US session. Okay. However, I wanna be there after the first hour has traded. That means every session of mine is made up of 3 hours. Okay, so I only want to be there for 2 hours. If it's during the London session, I want to come at 8 o'clock, but I'm not going to do anything. I'm just going to draw my lines at 8 o'clock, and I will open the position around 9 o'clock. Okay, from 9 o'clock, that's where I'm starting to look for my entry, unless it's a continuation pattern where the first 15 minutes will be enough for them to give you a signal that they are continuing either down or up. But if it's trades like this, then I want to be there from 9 o'clock during London, and during New Year's session, which opens at 2 for me, I want to be there at 3 o'clock. That's when I start looking for an entry. 3 o'clock, 4 o'clock. If I don't get it, then I don't care. It's gonna be 3 to 4 and 4 to 5. If I don't get an entry, then I know I have nothing for that day. Okay. However, before, what I'm do is I analyze all the charts just as I show you in all my videos, and then I select a few that are ready. Okay, so now when things are like this, I just want to bring in my colors. Okay, my session colors, you'll see them. It's a free indicator called iSession. You can just Google iSession and you can download it. I'm also gonna bring my indicators that shows me whole numbers. Okay, you can also download that one. It's called Street Spot. Okay, they are free indicators, but I don't use fancy indicators because I always tell you that your indicators are misleading you. So let me bring in my indicators. Okay, now you see, this is the beginning, this is the Asian session, this is the London session, and this is the New York session. So I want to be there after an hour. That's what I always say. I want to be there after an hour, but I want to come at 8 o'clock and then start analyzing from 7 a.m. Why? Because 7 a.m. is the beginning of a new 4-hour candle. So you must actually know what's happening on your 4-hour time frame. You must know what's happening on your 1-hour time frame, and you also must know what's happening on your 15-minute time frame. Okay, even though you're using 1 minute. So I won't be switching from time frame to time frame. I'm gonna be using one time frame, which is 1 minute, but I will take all those things into consideration. So first things first, we have our consolidations. Okay, this is my consolidation from yesterday, and it's just as I explained. It's just what did I say? It's the recent high made in US session and the low of the day. Okay, or the low of the US session. Those are gonna be my two consolidation, but usually it's the low of the day and the recent high. So again, when this session begins, when I come the following day, Okay, I'm gonna come at 7 a.m. Okay, now I know that, okay, I have this consolidation right here, because this is where Asia traded. If you look at it, this is where Asia traded. Okay, and then we have this gap time. This gap time is very important to understand, because this is the time where the guys from Asia call the guys from London and explain everything. Oh guys, I trapped some people down, the people who bought here. Okay, the stops are all over here, and then I pushed it up. You just continue pushing it up. Okay, and then you can just run these guys down. And then during this gap time, I don't want to be in the market. Okay, I'm out. Or if I find a trade towards the end of my session, what I'm gonna do is I'm gonna put a stop and I take profit. Then I'm gonna execute it and get off the screen. Okay, as long as I have my stops and my take profit in place, it's gonna either gonna hit one of them. Okay, so these guys here, during this time, this gap time, these guys are gonna call these guys and tell them, okay, this is what I did. There are people who bought here at the low, so what you can do is just go and run them through, and already they've calculated how much those stops are. Remember, they have the best resources. Okay, so remember, there are guys from here, the guys from here, the guys from here. These ones work 3 hours, they knock off. They call these guys. This come 3 hours, they knock off. They call these guys. This come 3 hours, and then they call it the end of the day. And towards the end of the day, there's nothing, that just gonna consolidate. So if you are taking a trade, maybe usually after 7 o'clock, unless if there's news events, usually after 6 o'clock, 5 o'clock, then you're not gonna get most from your position. Why? Because the session have closed. And remember, you're gonna be alone. Okay, you have a lot of things to deal with, guys. You have friends, you have a family, there's just a lot of things you deal with as a human being. So these guys don't care. Okay, these work 3 hours, they knock off and go and have fun. You are still sitting from this session and you're waiting for them. Oh God, I'm sitting at a loss. You bought here and now you are in profit. You're just wishing, I wish it goes 100 pips, 500 pips. In your dreams, it doesn't happen like that. But even for me, I thought like, oh, when I buy here, I want to see it going up for 500 pips. It's impossible. Okay, so you must understand. That's why I try to minimize. I come during the session, and what I do is I want to be there after 1 hour. This only gives me 2 hours to be in the market. You can't get tired during 2 hours. Okay, and then from here I knock off as well, and then I'll come back here and be on the market after an hour. Just want to be there for 2 hours. Okay, so like this helps me keep my sanity, because hey guys, you can't just be staring at the screen waiting for something that's not coming. So now let's get into business. Now I'm on a 1 minute time frame. What I do is as you can see, this is 6 o'clock based on the server time of this broker, something we cannot change. The server time is 2 hours back. Okay, so we are behind in 2 hours. So what I do, I'm gonna look for 7 o'clock, which is gonna be 5 o'clock. Wanna show you, this will also show you how to trade a 1 hour time frame. Okay, so the market is gonna, this hour open somewhere here. Okay, this is the candle that opened, this is the candle that opened the 7 a.m. 7 a.m. candle. That's the beginning of a new 4-hour candle. Okay, because your 4-hour candles open at 11 o'clock in the night. It runs 12, 1, 2, 3, and then a new 4-hour candle starts 4, 5, 6, 7, and then from 7 a new 4-hour candle starts 8, 9, 10, 11, and it goes and goes and goes and goes. That's why this session of mine ends at 11 o'clock. It starts at, I'm gonna start analyzing on this 4 hours, so I only want to trade during that 4-hour candle, but only the last 2 hours, because you're also human. You need to take that into account. Okay, you have to take that into account. You don't want to be sitting on the screen the whole day and night just for something. It's gonna drive you nuts. Okay, so minimize your time, because the more tired or distracted you get, you're gonna end up taking crazy trades. And as I always say, this is not gambling, it's a business. So you want to be at the best state of your mind. Okay, so hence I say minimize your time on the screen. If you come and they've gone 100 pips, it's fine, you didn't miss anything. There are many There are many currencies to look at. There are many. You can go to indices. You can go to metals. You can go to currencies. You can go to bonds. It's all up to you. There's a lot of things to look at, okay? And even if you are looking only at currencies, there's still a lot, okay? So you might miss one, but maybe you have 3 of them that have set up in the best way, and you're gonna miss on one. You still have 2. You still have different sessions. So try to minimize your time, okay? So this, for me, I'm just gonna mark this one as 7 a.m. open. Now I want to show you how to find your entries. Sorry, I'm over explaining, but I have to, because I find it hard for people to understand the concept of this video. And this is the low of 7 o'clock, okay? It's not the low, it's the high of 7 o'clock, okay? And this is the low of 7 o'clock, okay? This is the low, okay? So what are we doing now? We have taken the previous 4 hour into account. How did we take the previous 4 hour into account? Okay, I drew my consolidation since the beginning of the day. The day began here, so I have these consolidations, as you can see them right here. These tell me how the previous 4 hour traded, okay? Actually, the 2 previous 4 hours, how they traded. So I'm not worried about anything. I'm still within the previous 4 hours, even though this one and this one is my main consolidations from the previous day. So we have a pattern within patterns. If you read Skabaka's book, Technical Analysis of Stock Market Profits, Skabaka, it's Richard W. Skabaka, okay? You'll understand these patterns within patterns. So now what I have an hour. I know that 7 o'clock opened and made a high and made a low. Now I'm gonna track 8 o'clock open, okay? Now I know that 8 o'clock opened here, okay? And right now it's gonna be much easier for me to draw these lines because I have the highs and lows, because okay, these things have already played out, okay? And I did take this trade yesterday, okay? So now what we know that we have 8 o'clock open, okay? 8 o'clock open, 8 o'clock open, okay? 8 o'clock open. And now when 9 o'clock hits, that's when we will be able to say, okay, this is 8 o'clock high, okay? However, we won't be able to say it's 8 o'clock high until 9 o'clock is registered on the time, okay? So this is the high, okay? This is the high of 8 o'clock. Now we're trying to read a story. Let the markets trade and give you a story. Where is the low of 8 o'clock? For that, we need to know where 9 o'clock opened. And 9 o'clock opened somewhere here. As you can see, I'm looking at the time down here, 7 exactly. So I think this pin is this pin is the candle that opened 9 o'clock. So 9 o'clock opens here, okay? We're just gonna write this here. As I told you, I don't want to be in the market for the first hour, which is this hour. But when I come, I'm gonna come during this hour so that I can start analyzing and grasping the story that these charts are telling me. So if this is 9 o'clock open, where is the low of 8 o'clock? Well, this is the low of 8 o'clock, okay? This is the low of 8 o'clock, okay? So we just run it through. Okay? This is 8 o'clock low. This is 8 o'clock low, okay? Low of 8 o'clock. It's fine. And now let's start reading this story. And I told you, from 9 o'clock now, I want to take into account every 15-minute open, okay? Because this hour I don't care about it unless it's a continuation pattern. But if it's something like this, I'm not interested in it. But I'm gonna take this 15 minutes into consideration and the picture. And don't forget that now I told you that I have put in 2 indicators that I didn't explain much about them, but now I will explain what these indicators represent, okay? First of all, this is a whole number. It's like, okay, they're telling you that the price now is 1 rand exactly, it's 2 rand exactly. And this one is it's 25, okay? This one is, yes, it's 25. This one is telling you that, okay, the price is 2.25 and stuff. And this one is 50. It's telling you that the price is 2.50. these are the levels at which, or they are the prices. This is the exact price, nothing fancy. They are just making me aware that okay, now the prices have came to 1 rand exactly. They came to 110 cents, something like that, when there is a whole number, because those are the numbers at which markets will usually, not markets actually, institution, banks and all these big institutions, they are usually going to react on these numbers. So start paying attention to them. The indicator is called sweet spot. Just search for sweet spots, you will get it. Okay, and this is my session time. It's called I session. This only colors my session. And then I have the low and the high of the day. Those are my 3 indicators. Okay, so it's nothing fancy. It's more or less to do with the price. So none of these indicators actually influences my decision to open a position. Okay, let's read the story. 7 o'clock opened here. It made a high and a low. Good. What happened? The low of 7 o'clock remains intact. Nothing happened. Okay, it's still untouched. Oh, that's good. And we remember, our setup, based on our setup, we are expecting the market to hit the low. Okay, but we can't enter blindly, because sometimes markets are not perfect. You just have to have strict rules. Sometimes they won't, on which it's quite rare, but you don't want to be gambling. Okay, you want to only enter when you are sure. So what happens? Okay, the low of 7 o'clock is intact. However, 8 o'clock opened and immediately ran the high of 7 o'clock. We can't talk about 7 o'clock open, because it made a high and was ran. In other words, it went up and it was ran. So 8 o'clock, when 8 o'clock opened already, this was ran up and down. So everybody who maybe opened a position at the buy or sell here is already closed. So these guys who sold here were in a profit. But 8 o'clock opens, these guys who sold here, who bought here, actually are in a profit now, because 8 o'clock runs 7 high and immediately hit our whole number. Oh, this is interesting. This is 8 o'clock, I mean, and they give us 1, 2, 3. Look at something amazing that's happening here, because I want you to understand this. This is crucial. What happens here? 1, 2. The second push closes the first push. Oh, this is interesting. This is interesting. Okay, if we were to look at every 15 minutes, okay, this is fine. Made a high which was ran out. Now we have a high that was retested. Okay, I told you on the criteria you must have a high in place. Okay, now this high has been ran. This one is intact, and the market went up again. Okay, what happens? They keep trying to go up, but every time they pull up, they don't revisit the previous level. Okay, this level was never revisited. This level here was never revisited. I don't want to have many lines. This level here, once it was hit, it was never revisited. Okay, what does the market tell you? 9 o'clock opens. 9 o'clock opens, try to go up. Let's see where 9:15 opens, because now we are interested in every 15-minute candle. Okay, 9:15 opens here. Okay, this is 9:15 open. We're just gonna write it down. 9:15 open. Now we are trading every 15-minute candle. Okay, this is how you can get 1 minute to be simple and understandable. Now we need where 9:30 open, because 9:30, guys, is an important time. 9:30 is very important, and the story it paints, you'll understand after this. 9:30 opens on this candle. Okay, so 9:30 opens where? On this candle. This is where 9:30 opened. Okay, and 9:30, write it down. 9:30, 3:30. These 2 times are amazing. Okay, usually they will give you the final push. If 9:30 doesn't, 9:45, pay attention to that time. 10:30, 10:45, pay attention to that time. Why? 10:45, 45 actually, 9:45, 10:45. It's the beginning of the last 15-minute candle of the hour. We know that when 1 hour is made up of 4 15-minute candles, and 45 opens the last candle. Okay, something to pay attention to. Now let's see, 1 2 3, yet we can see that, okay, they are not revisiting. I told you, and I'm gonna say it again. Say maybe they want to sell $500 million. Okay, they want to open a position whereby they want to sell $500 million. For an institution, it's hard for them to sell. What do they need? They need an equal amount from people who are willing to buy, because institutions trade against people, and the objective of the market is to take capital from the many, from all the institutional guys, and give it to the few, the institutions. We know we have few institutions. Okay, those people control the economies of the world. They are those powerful people whom all this capital is taken from people and given to them. So they have the power to move the market. That's the first thing. You can't move the market. Markets do three things: they show, they trap, and they reverse. Okay, so now they're going up, and the important picture they are painting right now is we are not gonna go back and release. Say maybe here they sold, say maybe $500, they want to sell $500 million. Say maybe they sold a quarter of it here, but they then realized, oh no man, people who actually sold here, there were too many, and there's a lot of stops here. They have to revisit that area to grasp all the stops, because their main objective is to take from many and give it to few. And if many people are selling here, then it means if they go down, they're gonna go with many people. So they can't afford to go with many people. They are greedy guys. They want everything, so they're gonna run through it. But now, say maybe they sold a quarter of that 500 million here, they sold another quarter here, so they're left with a half. They sell another quarter here, they're left with 1/4. They sell another quarter here. Okay, in other words, people are buying. Why? Markets will show you we are going up, 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 and then they trap you, then they reverse. Remember, those who bought here, maybe their orders have been fulfilled. I don't need these lines, man. Maybe their orders were fulfilled here, so I'm just gonna bring this green dotted lines that represent a sell. Okay, I'm just gonna put some dots here. Maybe their orders were fulfilled here, and their stops are, maybe they've put their stops somewhere here. Okay, I'm gonna change this to red. And remember, most people with big accounts don't bother themselves with using stop loss, because they believe the market will go down and come back. But the market is going to go down in a way that you are human, you'll feel the pain, and you'll exit at a big loss. Say maybe you're at a loss of 500 Rand. When it drills deeper, now you're at a loss of 5,000 Rand. Guys, you can't take that. Okay, if you have a big account, now you're at a loss because you're using bigger lot sizes. Now you're at a loss of maybe 50,000 Rand. You can't take that. You're going to exit. The more it goes down, it's now going to 100,000. 200,000. Then you're gonna start doing what? You're gonna start exiting the trades by yourself at a very big loss. So this is what these guys want. So the people who bought here, their stops, the orders got fulfilled here, and they are automatically at a loss. Why did their orders get fulfilled here? Because of spread. Okay, you know that your orders are not immediately fulfilled at the level where you buy, because there is spread, and the spread is the profit made by the broker. Okay, so there are these guys who actually executed their positions here, who bought here. Their orders are fulfilled here. Okay, this is important to grasp. Okay, and there are these guys who actually sold, who bought here. Their orders are here. So now we have 3 levels of orders. The first quarter is here, the second quarter is here, the third quarter is here. Now we are going to the fourth quarter. That fulfills the $500 million order. Okay, so when they come here again, this is where the final orders are fulfilled. And maybe for a bonus, they go down, they give you this push. You see this push, they give you this push, but already they've told you that, oh, we are not revisiting these levels until we go down and drill deeper and close everybody's stop. Okay, some people put their stops here. We have different risk appetites. Okay, so now what's happening? They told you that, okay, they're not gonna revisit any level here, because now they're going down, 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 down. They're not releasing those who are already trapped here, because That's how their orders get fulfilled. So when you start seeing this, become curious. In other words, for me, what this tells me is, okay, since now they're not going to break these levels, because, okay, this is where the orders got fulfilled. That means if I put my stop here, if I am selling now and put my stop here, because if you are trading in line with them, then you understand that the retail guys are trapped going up. And if you want to be going against the retail guys, remember 90% of retail guys are just losing. Only 10% are profitable. So if you want to be profitable, you must go against retail guys. And one thing this tells you is that, okay, now I know that retail guys are trapped up here. So anyway, oh, that level just followed me, guys. Oh, but I believe you got the concept, okay? It just followed me, because yes, this guy's orders were fulfilled here. So now you know that anywhere between these lines where you put your stops, your stops are untouchable. Why? Because the market is already painting a story that they are not gonna go back to those levels they have trapped. Okay, so if you put your stop here and you sell, you are safe. But I'm not saying sell anytime now. Wait for them to show you an engulf. This is the last pullback back inside. This one is the last pullback. You see this black candle here? It's the last pullback. Okay, so this gives you your first entry. Why? Because now you know they've trapped retail guys here, and your thesis was saying that, okay, you are taking it back to the low, and the timing is perfect. Look at 9:30. 9:30 opens, it gives you a small push, then immediately changes the direction. Okay, and where is 9:45? 9:44, 9:45 is this little pink candle. This is 9:45. Okay, this is where 9:45 opens. Now we are paying attention to the clock. Okay, 9:45, I told you it's the last candle of the 15-minute, is the last candle on the 15-minute chart of the hour. So when 9:45 opens, it gives you the final kick. You miss this one, you'll be like, okay, you'll be regretting, because this is the last push. 9:45, this is the very last push. Okay, it's the very last push up. And to make things more exciting, they give you what I call a pin. Okay, let me go back to my criteria. They give you what we call, I don't want this to, unfortunately this, okay, I don't want this to be blown out. They give you what I call a pin engulf. It's a pin engulf. After they've engulfed 8 o'clock, or after they've engulfed 8 o'clock open. This is crazy, right? 8 o'clock was intact. Now they just engulfed 8 o'clock open. They gave a final push back inside. And now all these levels that were intact, now they are running through them. So this is how you get your entry. All these criteria have been met, guys. We have a triple top. That's our pattern. Okay, we have a triple top. That's our pattern. Okay, and as you can see, they came down and they tried to trade back to the top, and they eventually failed. Okay, 1, 2, 3, because this is, I won't count this once. Let me show you something, because people usually fail to understand why we say 1, 2, 3. Okay, as you can see, this pushes, it's 1. This push is just inside this one. Okay, it's just inside this one. Okay, so it's just consolidating. So you can take it as 1. This one pulls back, it consolidates, it's inside this one, and then we have a final one that breaks down. It breaks down, and third push. You see, so those are your 3 pushes. You must be able to identify 3 pushes. Okay, once you identify a pattern and 3 pushes back into the pattern, and you have your last push after they've trapped traders, this is your first entry. Usually what I'll do here, I open a very small position, a very small position. Okay, very small, and then when they come give you a pin and engulf, this is where now you release your actually you open big lot sizes. Because guys, what I always say is, this is not about how many pips you make. Okay, it's not about how many pips you make. Okay, pay attention to that. It's not about the number of pips, it's about the quality of the trade. You can see they've trapped, so anywhere where you put your stops up here, they are not going to revisit these levels, because they've showed you already that we are not revisiting these levels. Okay, so usually I told you I prefer a stop loss of 10 to 20. You see now, you can just bring your stop loss in between here, or even put it here. This is just roughly 20 pips. If you bought here, it's 20 pips. You see, already you know that this stop is safe. Why? Because they showed you that they're not gonna go back to it, and your thesis is saying they're gonna come back to the low of the day. So when you buy here and buy here, you can put any lot, any position. Okay, and apparently you made roughly 40 pips. Crazy. They didn't hit it at first, but you need less stress, so you could have closed after this pin. So you were gonna close at roughly 37 pips, which is still good. Okay, still good. It's a good profit. Okay, because it only took roughly 46 minutes to hit your take profit. So easy, so quick. Your entries clean. You waited for them to trap, and show you where they are not gonna revisit. You follow time. 9:45 shifted everything away, but it started with 9:30. 9:30 engulfed, because 9:30 opened, went down and pulled back. It engulfed 8 o'clock, so it engulfed the opening of the session. This tells you that don't buy when it's going down like this after this engulf candle. You must always, if you are, don't sell actually. If you are selling, you must sell high. If you are buying, you must buy low. So make sure you get the best entry. You finance your entry. You increase your R&R, risk reward ratio. Okay, so this is your best entry, and this is your second best entry, based on everything that has been happening, based on the criteria. And let's just run to gold quite quick. I'm gonna just spend less than 5 minutes on this one, or 10 minutes, because I've already spent a lot of time over explaining a lot of things. Okay, so yesterday alone we have about we had about how many trades? 2 trades, 50 pips. Okay, this market was going up, but eventually it started doing this. It's, as you can see, man, if you go to 1 hour time frame, you see that this market was just going up, and then all of a sudden, I told you about indicators, I told you about the trapping and all sort of stuff. They trapped, opened high and closed low. Now they're telling you that they're gonna go down. At least you are expecting them to come and hit this level. Okay, so let's go and see what happened. You're not gonna enter blindly, you're gonna wait. So let's throw in our 15-minute charts. Okay, and let's go to our indicators, and we are gonna go to our sweet spots, and we're just gonna add zeros. Okay, because gold is more volatile. If you are trading indices, gold, oil, or whatsoever, you just have to add a 0. Now you see the lines are in a better form. Okay, so we had our consolidations before the night. This is the last high and the last low of US session. Okay, this is the last that was made in US session, and this is the low. Okay, now we have our consolidations. What I'm gonna do, I'm gonna come to a lower time frame and just try to, oh, it's fine, let's just try to make this a little bit okay, let's blow this quite quick. Okay, this is the low, this is our high from yesterday. We draw this line before we go to sleep. Okay, and then the following day when we came, we saw that, okay, now we had another consolidation. This was the consolidation we had, okay, from the previous session, but let's just leave it. Okay, but our thesis still is telling us that the market is gonna go down. I just left it because already you can see my chart is beginning to be a little clustered, so I don't want it to be clustered. So what happened? they traded here, they went up. This was a continuation pattern, so I really don't mind. I told you, if it's a, this market has already broken down. As you can see, it's going down. So this is a market that is broken down. So I told you that when a market is broken down like this, I don't have any problem entering on the first hour, but it's still okay. We can come to the second hour and see where we get our nice entry. So what I'm gonna do is I'm just gonna go to a lower time frame, but I'm not gonna show you all what I showed you during the previous ones. Okay, now again here we have a pattern which is an M. Okay, what time did this pattern happen? Actually, it happened at 40. Okay, it was closed roughly at 42. It was completed roughly by 45 of the first hour. Remember, we're only gonna trade the second hour. Okay, so I'm not gonna do all the slides because this video is already long, but what I can say is that now we have our pattern which is an M. Okay, and we can just draw this smaller nyana line. Oh no, not this one. We can just draw the smaller nyana line, this one. As you can see, this line, it will just show us that okay, the market was on this other side going up, and now the market is broken down. Okay, now we have seen that it's fine. Now we have a pattern which is an M. They break out of the pattern. Perfect. This is after breakout to the top. Okay, they break out of the pattern. Okay, once they broke out of the pattern, they give us one push. This is crazy. This is crazy, and I want to show you, this is insane. This is insane. Okay, I'm gonna just do this to this line. Okay, do this to this line, or else it's fine. We can just okay, pull it all the way to the side. It's fine. But look at something. Look at something. We have one push to the top. It broke up. Okay, we can't say this is a push because this thing was still coming down. You see, they pushed one. Okay, they broke out from the pattern. They pushed one. Okay, they pushed again twice. Okay, they pushed again 3 times. They pushed again 3 times. Okay, and I'm gonna show you why I'm putting this as a push. You see, it came down, it pushed. Okay, one, it broke the low. Market structure, they've broken this low. Okay, so this become one push to the top. It's not consolidation. We know they've broken out. They are not just consolidation. Now they come, they push down. We draw a line. Okay, is this consolidation? No, they actually broke the low. So these pushes are valid. Okay, these pushes are valid. Okay, they are not consolidations. Okay, they're not consolidation. They are valid. Let me remove. They pushed 1 back into the pattern, 2 back into the pattern, 3 back into the pattern, and let me show you some. Let me remove this because I want to show you something interesting, something similar to the previous trade. Okay, let me lock this line and remove this one only. Okay, now as you can see, this part is high. People who bought here got fulfilled somewhere here. Okay, I'm not gonna change the lines. I don't want this video to be long. Okay, but it's crazy, it's already long anyway. So as long as you understand, it's not about how short or long the video is, it's about you grasping the concept. Okay, so people who bought here, their orders got fulfilled somewhere here. We can actually go and look at the spread. You see the spread, this is the gray line is the price, this is the spread. So if you're buying here, your order will be fulfilled above, and they can expand it as much as they want. Okay, so let's go to something again. This one is lower, so the people who bought here, maybe their orders got fulfilled somewhere low here, and this one is also low. The third one is low, so people who bought here, the orders got fulfilled here, and we have a high. Once we have a high and they've tried to push 3 times to the high, then you know the high is locked. And what are they showing you? Like in the previous trade, they're showing you that we are not gonna revisit these levels. Maybe they wanted to sell $500. That's the example I use, because 500 can be divided into into quarters. Okay, let's say maybe they wanted to sell 100 million. Okay, $100 million. So it means they sold maybe 25 here, they sold 25 here, they sold 25 here, and they sold 25 here. What does that tell you? It tells you that their whole order got fulfilled. When their order is fulfilled, guys, also note here, when they made this M, this is higher than this one, and look at how perfect they leveled the playing ground. I'm just gonna blow this a little bit, okay? These are the small things that should give you a clue of what they are doing on the market. You don't move the market, okay? This one is higher, of course. Let's look. Let me blow my charts. I'm not gonna put times just for the sake of okay, because this video is already too long. Just look at the level. It's so perfect. Look at the closes of this candle. You see, they are telling you we are not going beyond this level. They might go with their spread, but they are telling you our prices are not gonna release the ones trapped up here. They are not. Remember, indicators will show you that these guys are going up. They'll actually tell you buy, and you have bought. And now they're telling you, okay, if your order has been fulfilled here, you are in a loss until the prices surpass this level. So now they are telling you a story. Look at how perfect this is. This is something you should start paying attention to. Pay attention to each and every candle. It doesn't matter if it's a 1 minute candle, 15-minute candle, 1 hour time, 1 hour candle, 4 hour candle, daily candle. It doesn't matter. Pay attention to things like this. These are little things that paint a very, very big story for you. If we come to the time, let's look at the time. The first push was made at roughly 9 o'clock. This candle is, you see down here, I told you this broker is behind in 2 hours. So look at the time down here. When we are on this candle, it's exactly o'clock, okay? 7 o'clock, which is 9 o'clock. Okay, 7 plus 2 is 9. So 9 o'clock completed the first push. And then let's go to 15. 9:15. 9 o'clock made the push. 8 o'clock made the first push, which was completed by 9 o'clock. 9:15 made the first push and went halfway the third push actually. And let's look at this time. Crazy. This is exactly 9:30. I told you about 9:30, guys. I told you about 9:30 and 3:30. I told you about these times. These are crucial times, okay? This is gonna be a 9:30 a.m. open. Okay, I told you about these times. They're crazy. I told you about 9:30. What does 9:30 do? 9:30 engulfs away from all this nonsense that was happening. All this trapping and all this nonsense has just been engulfed, okay? All this nonsense has just been engulfed. You could have entered after this inside bar, and you could have put your stops. Let's see, we don't want big stops. Okay, this is 27, so you could have put your stops just about this whole number here, okay? 1 push, 2 push, 3 push. Okay, you could have just put your stops here because they are showing you that we are not coming to these levels. However, any stop that is above these levels is guaranteed not to be hidden, because already they've showed you that we are not going to revisit this. This is where our orders got fulfilled. So if we go back to this level, then we let go of the quota that we just sold here, because people are buying. They show you we are going up. Market, show, trap, and reverse. Those are the 3 things they do: show, trap, reverse. Okay, or if they trap you enough, they'll just continue for the next session, because now they are just drilling deeper into your account. But you could have entered here. If you didn't want to enter here, that was good. Okay, maybe you could have waited for this one. This was the, what time was this? This was 40. Okay, 9:40. It's going to 9:45. They gave you a pin and engulf. This was your second entry. If you missed this entry, if you entered here, then it means your position was gonna be like, you could have just, your stops maybe were gonna be up here, but the moment they give you something like this, you just, if your stops are right here, what do? Now it's not gonna be clickable because of this whole number thing, but it's okay. I'll just bring a new line in. Okay, if your stops were above this candle, anywhere above this candle, now you can bring it down here, and then when it trades, already you are almost at break even. And let's see, from here, this is the Western Gulf after trapping all the people. From here, where is the low of the day? Okay, my low of the day was here, down here, but you could have just hold this trade for a moment, okay, and you could have taken roughly 60 pip in 48 minutes, or you could have entered right after the third push. Let's look at what they did. This is where I entered, okay, but it needs somebody who already understands. You could have entered right here. Why? This was the best entry, guys. This was the best entry you could ever get. Why? Because this level here, they gave a pin and an engulf. It doesn't matter how small or big the engulf was, as long as it's an engulf after they've worked the levels and have showed you what they have done. They were done, of course, with the third push, so you could have entered at this candle here, okay, or you could have entered here, or you could have entered here. If you did indeed enter here, that means you are gonna take about back to the low. It was gonna be 40 pips in how many, in 20 minutes? Crazy, right? And you could just have locked your profit here and waited for it to go down up to 50 pips. But usually what I do is I'll just measure 50 pips right away, because I am a fan of 50 pips. Okay, you just measure it 50 pips from here. Where is it? 50 pips from here, from the top to here, and then you get off your screen. And by the time you come, this was only 24 minutes, you have your 50 pips logged. Okay, so it did give a good entry yesterday during the London session. The same applies to here. They went up, and in this case they gave you a pattern. I'm not gonna go to the lower time frames because I want to finish this video. Okay, I want to finish this video quite quick. Okay, they gave you an M, okay, and immediately this is what they this is crazy, guys. I told you I want to be in the trade the second hour unless it's what, a continuation. Now we can see this market has broken down. You see, this market is going down. Now we are only expecting a continuation, maybe to this level, okay, maybe to the low of, because we know that these guys here are in profit. The people who bought here who were in profit all along, and this guy called this guy and explained to him that, okay, there are people in profit from where. The same applies to here. This guy called this guy and told him that, okay, I have some people who are in profit from which session, from when, how. Just run them and do what and what and what. The same happened here. This guy called each other during the gap times. So you just have to know how to capitalize. This market is going down. Here I'm just looking for continuation. So I told you that unless I'm looking for a continuation, I'm not willing to take the first hour. But this one I was willing because I knew that the market was already broken out. Remember, I come at 8 o'clock. I come at 8 o'clock or 2 o'clock during the US exactly. That's when I start drawing the lines, which I'm not gonna draw. But this one was the best of the best, guys. This is everywhere. I want to show you this. You see, okay, I've moved this line. I don't know where it was, but it doesn't matter anyway. It doesn't matter. Let me just bring it down, okay? You see, this was the pattern. They gave you an M. You know, we have different types of M. We have an extended M, we have this kind of M, we have an M that is at a level. So we have 3 types of M. Let me just quickly draw them for you. If you need M's and W's, just flip them and they'll give you a W. Okay, this is M, this is M. We have roughly 3 types of M. Okay, this M is equal. And then again we have an M like this. Oh yes, good. Then we have an M like this, and then we have an M like this. This one is gonna be low. Okay, this is actually the opposite of You see, this is our M. You see, yes, we have an M like this, okay, which is the opposite of this one. This one, the second leg goes higher, this one the second leg goes low, this one is equal. So from what I've shown you, I believe you know that now this M is this one. They're showing you where going up, going up, going up, and then yes, they go up, but look at what they do. They break this level, okay, and after breaking they give you 1, 2, 3. So this is the variation they have. They can play with you when it comes to how they give you 3 pushes. That's why they're gonna get you lost. That's why they're gonna just like trick you and all this sort of stuff. But when you understand this is your entry and these are your stops, you can put your stops just here. You can put your stop above here, because already they're showing you that we are not coming big to this level, we are not coming to this level, and they start going lower and lower and lower. The same thing applies as what I've explained in the previous ones. Sorry for that, okay? You see, this is your stop. How many pips is your stop? 14 pips. You can take any lot size, guys. This is an engulf. After 1, 2, 3 pushes back into the pattern, this is your entry. It's a continuation pattern, by the way. That's why I am willing to open an entry, and I said we take it back to the low. Which low? Back to the low of the previous session. Okay, good. Now let's see from here to here. This is 40 pips, okay, and then usually I measure 50 pips. That's what I always do for all my trades. I want to measure 40 pips, 50 pips I mean. You see, this was 50 pips in how many minutes? In 41 minutes. It can't get crazier than this, guys. Less stress. You lock you close your screen and you get out. So you were only there for 1 hour, and everything. You set your take profit, you set your stop loss and your entry. You can go out and do whatsoever you are doing. When you come back, your profit will be hit. Same applies to here. You took your trade, you understood the trapping and everything, you understood the timing element. Let's look at the time right here. The time of this trade was actually, this is 2:30, okay? It's crazy, guys. It's just crazy. It's crazy. 2:30 they shifted the zone and immediately your take profit is hit. The same applies to this one. You opened a position, you place your take profit, you go out. So you're only on the screen maybe 1 hour, 2 hours, and that's it. Okay, your sanity will be there. You won't be stressing a lot because of time. Remember, there are people who are gonna sit all the way till the end of the day. Guys, stop stressing yourself with that. Okay, just take what you can, spend less time on the screen, take your trade and lock it, analyze. Once you are sure, take what they have given you, get out of the screen. Okay, continue with your life as always, because the main objective of doing this is like to have plenty of free time to yourself. So you can't be on the screen the whole day. It's a Friday. If you want to go out, you just set your things and you have your phone. Okay, you can look at your phone. Okay, now my take profit has been hit. Now you can spend what you want to spend because you have already made a lot. Okay, so this is a business. Only take when you are sure. 1, 2, 3. We know now that the high is locked. They are not gonna go back once they give you 3 pushes and pull down. Okay, they can only trap you on this 3 pushes. You see, this push, this is only 3 candles. Sometimes it can be 1, 2, and then they give you a black candle, and then third candle, then go down. So you see, this one was 1, 2, 3. There's a variation in the number of pushes. So just understand who is trapped. So for me, I could have drawn a box right here, made it red, and I could have told you that, okay, this guy is who is trapped. Okay, it's all about that. They show trap and reverse. Now I know that everyone who was buying here is trapped. Okay, and my thesis has been proven right, so I can continue with my trade. If my thesis is not yet proven right, I can wait. If it's not proven right until the session ends, well, then I call it a day. Okay, so you see, even here, you know that everybody who was selling, and even selling here is trapped. Okay, you can say this is a shoulder, this is a head, and this is a shoulder. You can call it whatever you want, but if you understand the concept, how they trap, you understand how they operate, how time plays its role in this, then you are good to go. So guys, thank you. I know it's a crazy concept to understand, but I just believe that if you watch, spend time, try to identify the three pushes, put the time element into practice, and actually do your best to understand this. I have a lot of video that shows you the setup, how I decide on, okay, I think this day is gonna go down based on what. I've showed you everything. This is how you will be able to get the best entries, and I know this is few people are gonna watch this, and that's a good thing, okay? Because people want easy things, trend line, it's broken, sell. No, it doesn't work like that. Understand how the institution operate, because they have their power to move the market. It's only them who move the market. So when you understand them better, then you'll understand everything better. Okay, so guys, thank you a lot.